Hello, hello, hello. Welcome to Al Stock Trades. Mic check 1, 2, 3. This is going to be an important video, so definitely stick around. We're going to talk about macro. We're going to talk about SoFi, lots of things. So overall, today was a wonderful day for SoFi Technologies, up 5.74%. We made a video 3 days ago saying how is it, SoFi stock, the rebound effect, and definitely watch the video because we talked about how we were able to use our artificial intelligence support and resistance line supported by our stock terminal to outline the pathway to, showcase that potentially we may be rebounding. And certainly enough, we did. And then we went ahead and talked about our other predictions, how we on January 11th, when the stock market S&P was down, and on the end of December, we give a firm outlook that the S&P 500 will be reaching all-time new highs. So overall, we do our homework, we get rewarded, we put in the work. When people are sleeping, we reap the benefits when people are awake. So that's just the philosophy of our independent equity research, right? So what we're going to do right now is we're going to go to our terminal here, and we're just going to look at the support and resistance lines to see where we're at right now on SoFi. So we're going to type this up here, and we're going to go ahead and see. And obviously, as this goes ahead and loads, whoopsies, you can see that all the data that we get is from our stock terminal commands, and these are everything that we have here. As you can see, we're just going to go ahead and just kind of go all the way down here. So you can see that's over 2.5 billion outputs of commands. So what we see here for SoFi Technologies, we have the artificial intelligence support and resistance lines. And we have now a support line at the 786. We saw some strong V-shaped recovery here. We do have a strong resistance line here at the $8.35, which I believe was tested today, if I don't recall, right around here. And again, this is very useful because, people can do some nice day trading here. But what it looks like is there is some support here, but we have to zoom in a little bit. So instead of the minute chart, we're going to go ahead and upgrade and look at the hour chart, right? So we're going to do the hour here. That loads. So what we see here is that the 733 has been a very great support line. If you don't recall, in the video that we published for SoFi in regarding the support and resistance lines, one of them, we went ahead and let's see if we can pull up the chart here so you can see we're not making this stuff up. So this was 3 days ago, and we specifically said, hey, this looks like a double bottom on the 733. And when you look at that, it certainly was a double bottom, and now it basically, it made us some money, right? So now the goal is taking a look at 797 and obviously still maintaining the 733. Now, what I'm going to do is, and we don't like to share this, I like to keep this research to our stock members. So this is just one of the releases that we gave about a week ago. Let me just go ahead and pull it out here. I wasn't planning on sharing it, but let me go ahead and give it to you guys here. Let me just go up here and see if I can find it. Here it is. So let me just go ahead and pull up one of our figures, and we'll just go in here and just kind of drag it to see. So this is part of our figures created by Al Stock Trades. This is a very simple approach of looking at RSI. When RSI is around 30, it means that the stock is oversold. And then when the RSI is above 70, it means the RSI is overbought. So as you can see here, 2023 was an actually easy way to make money. Every time the RSI was oversold, it was a great buying dip opportunity. This is for the S&P 500. Right now, we're in an area where we're pretty, and this is older before we broke out of all-time new highs that we predicted. So we're definitely in the overbought territory. So I would say the risk and reward to go in and double down on this new time high. Wall Street may allow you to think that this may continue, and it certainly can. But from a probabilistic standpoint, with all these amazing headline news, I think this is a fake out, and we're going to go in, if we analyze the presidential cycle analysis since 1950 and graph all the probabilities that ever happen, we find that the first half of 2024, the stock market actually doesn't bring you any money. The second half of a presidential election cycle is actually, that's where you make your money, right? That's when that's when you make the money, right? Which, you make this, stuff like this example from October to December, right? So we believe post-May, post-April, March, April, May, and post after that, we do believe that the stock market will ripe some fruit for benefit. But as of right now, the risk and reward is high. So when we look at SoFi, potentially it is a mid cap, so it can fall under the small cap territory, in which we believe that the small caps will outperform for the next 9 to 12 years from an adjusted basis of the small caps divided by large caps and small caps divided by the NASDAQ. But overall, this is the research I wanted to show you here real quick. But so we may see potentially further downside. But again, anything under what we saw in this region around $7, and if we're lucky enough to get back down to $6, these are all buying opportunities, so we can make some money. These are tremendous opportunities. Okay, so now that we looked at the hour, let's go ahead and take a look at the day. So all we got to do is just type in D here, the code and D, and it goes ahead and shows it with you. And as you can see here, again, we got a support line here at 686, which we didn't touch. We touched the support lines here around $7, but we could see the $8.12 is a resistance line, but obviously we were able to punch right through that today. So I don't really anticipate this being a problem, but just keep in mind the 931 and 1145. And then lastly here, let's take a look at the week here to see what's going on. And again, this is plants, the artificial AI implanted support and resistance. So it's really helpful, I would say. Again, 855, that's another one you want to look at. But overall, if we were to draw a trend line here, we are making higher highs and higher lows based off of this analysis. In fact, if we were to just pull up, and I wasn't going to do this, I'm just going to go ahead and open up just a chart here to graph that out for you guys, for folks that are not familiar of drawing these lines. I mean, it's very counter. I've been doing it for a while, so I wouldn't say it's overly easy. But if we were to just shrink this up a little bit here, kind of shrink this up, and what we can do is we can draw this nice trend line here just to show you kind of what I see. So overall, we can draw this here, and we can honestly bring it down here too, but this touches more. So we expect a rebounding effect, which is why we were really adamant about the potential rebound. And we could secure anything around the $9-10 region, but you can see this beautiful channel, which is going to be part of our lecture series from our mastering, given that the data that we have, we built to allow folks to easily do this. But you can see this kind of trend line here. And we drew one for Tesla today in our research edge, or our technical edge here. So that's kind of what I'm looking at right now, just to give you an imagination of what I'm seeing here. So let's, without further ado, let's go here. And now that we looked at the weekly, we're going to turn our attention to the comments section. Again, if you have any questions, just definitely type it in the chat. But I also wanted to talk about macro things. So overall, the reason why we believe the first half of 2024 is going to be a little choppy is because, the Federal Reserve, what is their stance on, the federal funds rate, the interest rates? And we believe that obviously they are going to cut. It's not like they're not going to cut because of, auto insurance. As we said, the composition of the inflation report is auto insurance and housing. Just go to your CPI report and go look at it and analyze it by per weight. So I think they definitely are going to go in and decrease interest rates, and potentially before interest rates decrease, we may get a timing in a position where folks are going to be like, could we get a recession? And that could basically falter in a form or down, particular breakdown anywhere in an S&P 500, no more than 10%, definitely less than 10%. But overall, I do like what I'm seeing here with this channel. I do think it's very difficult to break this type of channel, especially as SoFi is recovering, hopefully back to that 20+ region, which will definitely be followed up with our due diligence here. So that's what we expect on the macro side. We already talked about the RSI. Let's turn our attentions here. So, yep. How are you doing, Zach? I have more money coming Wednesday, so it was bittersweet watching them rise today. Yeah, I know it happens. It definitely happens. And, I would say there's also a FOMO cycle too. Other people that are invested in other companies, they're like, wow, this is going up, so let me pull out of this and put it in here. And so I would say, ultimately what's changed from last week to this week? That's the beauty of the stock market. Ultimately nothing, right? We're going to achieve profitability soon. And so I mean, it's basically cycling and arriving at the signal. And that's what we do here in our independent equity research. So if you like what we do, just definitely hit us up with a like, smash the like button, as it will help with the YouTube algorithm and help other retail investors find our channel, given our data-driven approaches. I mean, at this point, I think you've seen how we do our homework and how we're able to predict SoFi was a sell at around the $20 region, predict that it was a buy in the $4 region, and then go ahead and say, it's potentially has a probability of rebounding, given that we went ahead and looked at the technical analysis. So we're both in the fund analysis. So I hope you guys can appreciate that. And if you haven't done so, 55% of you, given the data we also look at, are unsubscribed. So please do, if you find value, subscribe so you can keep informed on SoFi to figure out if anything's changed in the fundamentals, especially if you want someone who's honest and trustworthy within this process. It's election year. They will keep the markets green. So historically, election years, the first half is a bit nonchalant, actually, and then the half is actually where momentous gains are. That's given from the 1950s. You look at all the presidential election cycles since 1950. Now, ironically, this is the first contentious election cycle. A lot of folks really don't like either side, and folks definitely don't like the former 45th president. So potentially they may keep the markets green. But again, I don't have a lot of data to support that. But I do see what you're saying. And have I thought about that? Of course I have. So I see what you're saying. But I stick to my research. It might play out that way. How we believe democratic incumbents that are tend to have the highest stock market returns in the S&P 500 in the presidential election cycle. But again, this is comparing to a normal Republican. We don't believe Donald Trump is a normal Republican. We believe he's really morphed, definitely there from Mars, right? So the stock market higher for him, and that's what a lot of folks are. Patrick Boyer, I believe, there's a lot of folks out there. That's what their kind of thesis are. So it's a self-fulfilling prophecy if that comes to fruition. All right, folks, I hope you enjoyed the video. Definitely like, and if you haven't done so, take a look at what we offer here at Al Stock Trades. We're about to end our sale on our New Year's coupon code. Type it in at Al Stock Trades and save yourself $800 for a lifetime. I will see you on the next one.